I want to show y'all why I'm getting into Kohl's and what it has to offer potentially. Kohl's is kind of getting beat up right now. It normally gets beat up around this time of the year. Their earnings is coming out very soon. I think it's like in 2 weeks. We got into a swing trade. This cost us $160. Our break even is $21.60. It is currently like what, November 8th. We have plenty of time for this to execute. This is one of those long swings. It may take a month, it may take 2 months, but if the contract is looking juicy, we're talking about maybe a 20 to 40% gain in the next week or so, I will execute. We're very low on the RSI. We're not necessarily bottomed out, but we're very low on the RSI. But as you dig deep into the financials and understand what's popping, you'll understand that they're doing a lot better than what people are anticipating them to do. If you look at them quarterly, they're starting to kind of get on the right track. They're starting to pull it together. And holiday season is coming up. With holiday season comes more sales, especially in department stores and stuff like that. You know Kohl's, bro. You know Kohl's is only popping around Thanksgiving, Christmas. Nobody going to Kohl's any other time. So you know that around this time of the year, Kohl's is going to be going crazy. So with that being said, I don't understand all of the financials. And I'm here to tell you that it's okay to hit the Google. That's what the Google is for. It's okay if you don't understand what's going on here to just Google it. Look, I had to understand what net debt was. It's basically all the money that they'll have left over if all their debt is paid. So that's key information to understanding, like, okay, has their net debt went down? What does that mean? Has their net debt went up? What does that mean? You know what I'm saying? So we're going to look at cash flow, but we're going to change this to quarterly. We don't want to look at it annually, because if we look at it annually, it's going to tell us on a yearly basis. We don't have a yearly contract. Last year, around this time, their free cash flow was negative 6,000. But this is not, I forget how these numbers, this is not actually what these numbers are. Like, I believe this is 141, it's either 141 million or 1.41 million. I don't remember exactly what the multiplications is, but it's not negative 6,000, right? But for the sake of just looking at this chart, we're going to say negative 6,000. You can see that their free cash flow kind of like, it was up here, right? In about January, but that was free cash flow from December and all that kind of stuff, right? But you can kind of see that the cash flow is starting to get a little bit more healthier. They're starting to have more cash flow. And then they're starting to pay off a little bit more debt. And slowly but surely, they're starting to pay off a little bit more debt. Now, this is where I was like, because at first I was like, I don't really want to get into this company. But then when I went and looked at their net debt, and I said, okay, this means this, they'll have 2.1 billion after they paid off all of their debt. And then it starts to slowly come down. But if you look at this, you start to see like, okay, maybe they have payouts to employees, to CFOs and stuff like that. So they're paying out their stocks to people. Their stocks is getting beat up. But I do think that there is potential with this. I think they're going to have better earnings than what people are expecting. Not crazy earnings, but enough to boost this price back up to about $20 to about $22. And then that's where we move, man. We're not trying to be perfect. We're not trying to say like, oh, I know exactly what's going on with the market. No, I'm just trying to position myself in a good place and make some bread. So with that being said, that was kind of like the reason why I got into this, is because the financials don't look great. Don't get me wrong. They don't look great, but they don't look as bad as people making it seem, right? So you can see that their gross profit last year, 2021, 5.9, 7.9, 6.6, and this is annually. So let's look at quarterly, right? Because quarterly, it kind of threw me off too. I was looking at annually and I was like, Then I started looking at quarterly and I started seeing some like, okay, we starting to grow. So we're not as bad. We're not going to be as bad as last quarter, right? We're starting to bring some momentum. With that being said, I think that this would be a good opportunity. And like I said, I don't know everything. There's going to be many people out here who know more than you. There's going to be many people out here who know less than you. I don't know everything, but I know that this is a potential chance for this stock to do something in my favor. Not nothing freaky. This ain't gonna be nothing freaky. They ain't gonna do nothing freaky. I think it's gonna do something good in my favor though, right? Kohl's is something that you see everywhere. It's not something that's like, oh, bro, Kohl's like, bro, they're gonna figure it out, bro. Whether they put Starbucks in their Kohl's store, they already put makeup. What is those things called? Makeup booths in there. They already got hair booths in there. They're already figuring out business models to make more money. Now I know people. When you look it up, a lot of people say like e-commerce is gonna run the world as far as sales. E-commerce for cheap products, yes, but you will never be able to get that experience of walking into a store. You feel me? Like that's never going to change. And that's what these stores bring. They bring that value of, oh, walk into a store, make an impulse buy, right? You can make an impulse buy on a computer. That's cool, but there's nothing like an impulse buy when you out with your man, woman, family, whatever. Oh, I'm about to buy some makeup. Oh, I'm about to buy some cologne. Oh, should I go get my hair done? Should I go get my hair cut? You feel me? Like there's just so many ways that Kohl's can advance in their department store space, even a lot of department stores. But I think we'll bang, man. Our expectations are a tad bit lower than last quarter. I think last quarter, that's like 0.80 something. They're saying 0.31. I think I'm expecting at least 0.40. You feel me? So we'll see, bro. We have a decent amount of time. When is this? When is their next earnings? I think their next earnings available November 26th. So we got a couple days. And like I said, just being, if we was just basing it straight off of the chart, it's getting beat up. Stocks get beat up all the time, but also stocks recover. And don't want to make this about like a presidential debate, elections, and none of that kind of stuff. But Trump being in office is going to ensure that some of these department stores, some of these malls, some of these things that create products in America are going to boom, not boom, but have more success. Because I know for a fact, overseas companies, they're not gonna like that tax, bro. They're not gonna like that tax. That tariff tax, they're not gonna like that. I know a lot of people be like, oh, well, it's gonna hurt our economy. It's not gonna hurt our economy. It may provide more jobs for people. It may actually, yeah, it may provide more jobs for people. It may increase the economy for us, not for everybody else, for us, because you're gonna have to go and get this. This is going to be American made. You know what I'm saying? Not that. I don't think that's going to be American made. But they're going to have to start making stuff more American made. Like these little remotes, these little keyboards, these little mouse pads is going to be more American made. It's going to be made in a factory, but we're going to have to pay a little bit more of a premium, which is okay because it's going to stimulate us. It's going to make our housing market go up. Well, it could make our housing market go down because a lot of people from other countries are invested into our housing market, which I hope they get that figured out because that's disrespectful. But that also stimulates the economy because if we as a nation can't create enough debt to stimulate our economy, then that's when they go out and suck up other countries' debt. And other countries believe, hey, we like the houses in California because we could buy it for $200,000 and sit on it for 30 years and it turns into $2 million. But if we put 200,000 into our economy, it doesn't turn into that much money because we don't have that much growth. So with that being said, there's give and take to both sides, bro. But regardless of the matter, I think we are going to be booming with this Kohl's move. I think this is going to be a nice move for us. I'm only telling you guys this because this is what I do, bro. I want to make this channel as transparent as possible to show you the climb, bro. Like you're gonna have to do certain things. You're gonna have to put money in certain places, and it's not all gonna be like, oh, I'm trading SPY, bang, $100, bang, $400. Yes, it could happen that way, but I want to take the investing approach all the way across the board. Like I did make some day trades this week, and they were pretty successful. I think we made over like 200. We could have made over like 700, but I made a couple mistakes, but it's okay. So we do have our cash secure puts about to expire. This was money. It's going to be $125 on the premium here. There's no way this is going to hit 225. Now, also, we have another cash secure put that I believe this one was, how many contracts we have? 4 contracts. This was a nice, healthy one. This can turn into, was this 200? I think this is like 225, bro. Yeah, I think this was like 225 or 220. So that's gonna be a good premium as well. So, bro, I'm rolling with these cash secure puts. All the money that I'm getting from the cash secure puts, I'm rolling them into trades. You know, like I rolled it into the Apple trade, which was very successful, and then that all from cash secure puts and all from cover calls. So I'm basically taking a large lump sum of money, putting it in a safe place and saying, yo, chill, right? Like chill and make me money. And then the other stuff, like the premium that I'm making from those, I'm going to swing those or day trade those. And then once those become larger lump sums, it's going to be like a snowball effect. So we're getting there, bro. The count's at, I don't know, what is this, 2,400 after this. Coles, I hate these long trades, but I gotta thug it out, bro. I gotta thug it out. Once I get the money from here, which I don't know if I already got it. I don't be knowing how the premium hit. If it hit at the end or hit at the beginning, I don't be remembering. But at the end of the day, the money's all in the account. I'm just showing y'all how I'm doing it, bro.